This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are starting a fresh new week, and we are starting on a pretty good note after Friday's bounce. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning. Well, a long week ahead. You have the RBI policy as well. So many headlines today. So I guess we have plenty to talk about and some big guests lined up as well.
Yeah, absolutely. And when you said that long, I thought you were going to say long weekend ahead.
Oh, there's
which
a
is
long
the next one.
Yeah, but there's a long time for that.
Well, absolutely. Well, let's just quickly tell you what you need to know as we begin another session, another week. Markets were on the front foot on Friday. There was a bounce which came through. And that after the previous 2 days, which is Wednesday and Thursday, where the Nifty had sold off almost 350 odd points or so. So Friday's bounce was good. That's point number one. Now, where do we go from here? I'll get to that in just a bit. But this is where the U.S. market action comes in. U.S. jobs data was inconclusive. Why do I say that? I mean, it didn't tell us very clearly which way things are going to go as far as Fed policy is concerned. The data itself was a little disaggregated, pointing in different directions. So the headline jobs number, right? How many jobs did the U.S. economy add? That missed by a small number, not a large number, very, very slight miss as compared to consensus. But the unemployment rate fell, and more importantly, the wages data within the jobs number was strong as well. Actually, it beat expectations. So you get a sense, markets got a sense that, well, overall, maybe there is a bit of a slowdown, but, well, unemployment rate and wages are still looking pretty good. So how to read it? And that's the reason I'm saying that the data, largely, by the end of it, was inconclusive. We were seeing this huge rally in U.S. bond yields, right? The 10-year, for example, at the high had reached 4.2, little over 4.2. In a single session, we fell. The 10-year yield fell 14 basis points to 4.03. So it's a pretty large, significant move for the one of the most traded instruments in the world, the 10-year. Consequently, you also saw the dollar index take a bit of a breather. We are around the 100, the psychologically important 102. I think we're slightly above it, but we fell 0.5%. That also had been rallying higher, and the S&P was down about 0.5% or so. So I think the debate still is out there that whether we'll get a soft landing, whether labor market is going to cool, whether, the Fed will reach its target at 2% inflation without a significant slowdown, etc., etc., etc. So far, the data that we've got is pointing in all kinds of directions. We don't know. Some say that the data is still too strong. The CPI number this Thursday, which we will get, will be the key input for the Fed decision in September. So I think it assumes added importance because of the kind of cues that we got from the jobs number. Let's come to the market here in India. We will need to see a follow-through after Friday's bounce, after the two-day sell-off prior to that. And how do we decipher whether what we saw on Friday is just a corrective bounce, which itself will get corrected, get sold into, etc.? You need to go with markers. So the first marker is the 20-day moving average, which is for the Nifty stands at 19,626. The Nifty needs to get its head above that level. It's exactly almost 100 points from where we left off on Friday. So above that, a close above that, I think, people will start to trust this a little bit more to be able to go long. Support comes in at Thursday's low, which is 19,300. That's 200 points out from where we left off. Bank Nifty resistance comes in at the 20-day moving average again. For the Bank Nifty, that stands at 45,356. The swing high beyond the 20 days stands at 45,783. The support for the Nifty Bank comes in about 1% lower, 1.5% lower at 44,280. So these are markers. The first for both the Nifty and the Bank Nifty, very simply, is the 20-day moving average. Even when that Fitch downgrade came, which was Wednesday, I think, for us, and I think in the Wednesday evening, we put that data out saying that in strong markets, bad news gets discounted. So fingers crossed, at least I would lean on the side to say that at least that Fitch-related damage perhaps is behind, and we trade more organically based on the cues that we get from US and global markets, etc. Sonia.
Oh, absolutely. And, there is definitely some caution on board. I take your point that there was a big bounce that we saw on Friday. But this morning, as we wake up, a lot of negative cues are stacked up for us. So the US markets, of course, were down for the fourth straight day, and you saw deep cuts on Friday as well. The Nasdaq, in fact, was down almost 3% last week, and it's the worst week that the Nasdaq can see since the month of March. Not just that, crude oil has seen a sixth straight week of gains, doesn't bode too well for markets like our own. Although the Nifty has been holding on to that 19,500 mark quite well. If you look at the FI data as well, FIs have been selling in the cash market for 7 straight days now. Once again, FIs sold over 550 crores. So the cues are stacked up on the negative side. Even in terms of earnings, right, almost all the earnings that came out post-market hours on Friday were below street expectations, whether it was Britannia, Bank of Baroda, Balkrishna Industries, BHELs, the losses went up year on year. So the earnings scorecard was not that great. In that context, a couple of things to watch out for. There's the RBI policy on the 10th of August, expected to be a status quo this time around, so no real move in terms of rates. And lots of earnings this week. So there's India Cements, Torrent Pharma, MedPlus reporting their numbers today. And tomorrow there's Coal India. On Wednesday there's Bata. So plenty of stocks to focus on. But, the odds are stacked largely in favor of the bears, purely if you go by the cues. But then again, we had that bounce back on Friday. So it's going to be an interesting day.
Well, that's right, Sonia. The long-awaited bounce back after a couple of dull sessions. We were hoping to end the week on a positive note. And that's precisely what happened. So the FIs, well, they had short positions which got covered out. So they covered close to 5,000 of those short positions, and they added 10,000 long positions. Now, we made this point last week itself that having some shorts in the system could be one of the reasons that we get a bit of a bounce. And that's the way it played out, because the FIs, they're not showing us the big money. The big inflows have dried up, but when the FIs are net short, that gives you a bit of a reason to see a bit of a bounce. And last week, we started the week with the net long positions on the FI side at close to around 5,000 contracts. Now, that got covered out and we moved into a net short positioning of close to around 40,000 contracts. Now, since we have 40,000 contracts net short, well, some of those contracts covered out. And that's why you saw a swing of close to around 15,000 contracts. So the FIs, they continue to remain net short, but now it's come down to around 25,000 contracts odd on the short side. In terms of the options data, we had two strikes that were very active. 19,500 put, that added close to around 36 lakh shares odd. Premium close to around 80 rupees. While the 19,600 call as well added roughly around 30 lakh shares, and the premium out there was around 50 rupees, which brings us to the levels. Yes, we had a good relief rally, but you'll feel more confident once we get past the 20 DMA. Since the 19,500 put though was written, you'll see the near-term support comes in at around the 19,400 odd mark, and the all-important mark will be last week's low. That's what we saw on August 3rd itself. The Nifty Bank, well, it was flirting around with that 50 DMA. In fact, it broke that mark intraday in the last week itself. So you have your two reference points on the downside. The 50 DMA, that's 44,660, and the August 3rd low as well, that comes up for you on the screen. So let's see how this goes, but you'll feel more confident about this move stretching on the upside once we get past the 20 DMA on the Nifty itself.
Okay, well, we have plenty to talk about, right? And some big guests joining us in a bit, so do stay tuned in. Let's start off with Lawrence Belanco of CLSA, who says that taking a hard look at the long horizon charts leads us to believe that secular changes in commodity, US yields and US dollar patterns indicate a sustained move towards emerging markets. He flags the long-term breakout potential in Brazil, China and Indonesia. In addition, he sees US-listed artificial intelligence, robotics, Internet of Things and clean energy ETFs as ways to play the latest wave of innovation. Lawrence adds, as AI is overextended, clean energy currently presents the most attractive entry point.
Okay, let's get you some money market views as well. B. Prasanna of ICICI Bank says that the US yields climbed and the dollar retreated after a lower than expected non-farm payrolls print signaled a softening of the job market. He says rupee, which tested the upper bound of the 82 to 83 to a dollar range last week on the back of strong dollar sentiment, is set to recover. However, he adds it will remain under pressure from rising crude prices and a lack of incremental inflows in the near future. He says the RBI MPC is expected to deliver a hawkish pause and will further give further cues to the domestic currency, which is expected to trade between 82.2 to 82.9 to a dollar.
And on the bonds, B. Prasanna says globally yields moved sharply lower owing to weaker than expected labor data. Back home, he says local yields are likely to remain volatile going into the MPC meeting, which is expected to deliver a hawkish pause, citing higher headline inflation prints. He expects the 10-year benchmark bond yield to trade in a range of 7.1 to 7.25%.
Well, we've a lot of stock-specific action to track for you. Get to that in just a bit for now. But for the time being, let's run into the list that we're looking at in our top 10 segment. And we're expecting just two stocks to react to positive news flow. That's CE Info Systems and Balrampur Chini. While on the flip side, you have Britannia, Cipla, Fortis Health, as well as a few more stocks. Bank of Baroda, Delivery, Balkrishna Industries, APL Apollo Tubes, and BHAL, all expected to react to negative news flow. So you have the ratio of 8 declines to around 2 advances.